In this video, Tesla stock collapses amid widespread panic as the stock market implodes. Plus, activist short seller Hindenburg Research, who had a hand in exposing Nikola, Fraudstown Motors and others, announces their short Twitter stock, and Elon Musk chimes in. Plus, Twitter exposes their incompetence, corruption and agenda by shadow banning my Twitter account in the wake of my public criticism of, wait for it, you won't believe this, Twitter's censorship and shadow banning practices. I'm not even kidding. We've got a lot to discuss, so let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. Talk about a chaotic day in the stock market. It's an absolute bloodbath. Everything, an absolute sea of red. Tesla stock down over 9% today, almost $80 per share. Let me know in the comments below if you bought the dip. I managed to grab 2 shares and now I'm probably not going to be eating for the rest of the week. Putting Tesla in context, over the last 6 months, the stock down 26%. Year to date, Tesla stock down almost 35%. And the 1 year now, Tesla stock up a mere 25%. I've got a funny feeling in 2032, this is going to look like quite the bargain. It wasn't just Tesla. Everywhere we look in the stock market, red, red, red. The NASDAQ 100 here, getting absolutely smoked, down almost 4%. Over the last 1 month, down almost 13%. This is crazy. Last 6 months, down almost 25%. And the 1 year, down almost 10%. Rivian stock, unsurprisingly, absolutely slaughtered. Share lockup expiry, this was to be expected, down over 20%. By the way, I just have to do this because, remember when I made those videos at the IPO going, what the fuck's going on? The people buying this are literally brain dead, and I mean brain dead, and I really emphasized brain dead. Well, I think I may have had a valid point. Stock down over 80% since IPO, and still, in my opinion, absurdly overvalued. Now, don't get me wrong, I wish Rivian well, but this made no sense. I covered it at the time, and I'm absolutely not surprised to see this. Admittedly, the macro environment has dragged Rivian and many other stocks down with it, but this is absolutely not surprising. The only people who will be surprised by this are those who, as I mentioned, suffered from brain damage and bought Rivian thinking it was a great value. Again, I wish them all the best. Maybe the stock will recover. Give it 5 years or so, might be break even. Lucid also getting slaughtered, down almost 10%. Similar to Tesla. Again, I just want to do this because, again, I had very similar things to say about Lucid. From its peak, down 69%, fancy that. Or maybe we can choose this peak instead. Even worse, down 70%. Once again, not surprised to see this in the slightest. And now onto Nikola, one of the greatest frauds of all time, allegedly in my opinion, your own research, blah, blah, blah. By the way, shout out to Trevor Milton. Hope you're enjoying your freedom while it lasts, my friend. Nikola stock down over 13% and again, same shit. From peak to trough, down over 90%. Who could possibly have seen this coming? Definitely not the guy that made 30 or 40 plus videos on YouTube warning about exactly this. Once again, the bell curve is real. Press F in the chat for Ford, down almost 6% today. Even year to date, Ford down almost 40%. Over the 1 year, up 15%. Why? Hopes and dreams. Let me narrate along this stock chart. This is where Ford says, hey, we're accelerating our EV plans. Hey, we're making more EVs. Blah, blah. EVs, EVs, EVs. Suddenly the stock market buys it. Next minute, down about 50%. From those torque-induced highs, not execution-induced. No. Torque. Here's a trick if you're a legacy automotive manufacturer. Tell everybody you're going to make lots of EVs. Then tell everybody you're accelerating your EV investment and your plans and increasing your EV production targets. Don't actually have to do anything other than tell people what you plan to do. And by plan, I mean hope. Suddenly your stock goes to the moon. Government Motors also down over 3% today. Over the 1 year, GM down more than 33%. Still a similar trajectory. Once GM announced their strategic partnership with Nikola Motors, for the fake truck that was never going to be made that just existed in computer renderings to lure in dumb retail investors, and then backed out of the deal. Again, coming back to reality. Talk's cheap, execution is not. Amazon down over 5%. A pretty brutal fall from grace over the last 1 year. Amazon down over 30%. Google's parent company Alphabet also getting smoked, down almost 3%. Over the 1 year, down almost 2%. Nvidia down almost 10%, getting absolutely reamed as well over the last 1 year. Quite resilient, up almost 20%. Netflix getting smoked as well, down over 4.20%. Over the 1 year, down almost 65%. Brutal. And ARK's flagship fund, the ARK Innovation ETF, down today almost 10% over the last 1 year, getting absolutely slaughtered, down about 60%. Smells a lot like opportunity to me, but hey, what would I know? I'm just some guy on the internet. Now, very quickly, a short new research note from Morgan Stanley. Quote, American metal I'm assuming they're not referring to the kind that I'm into. Dig here, dig now. Nobody wants a lithium or copper mine in their backyard. But with the vast majority of battery metals and upstream processes, refining, active materials, manufacturing done on the other side of the world, US companies and policymakers are re-examining the rulebook around what is done within our borders or closer to home. Demand for EVs is extremely high, but EV prices are also rising as raw material input costs put pressure on OEMs to preserve profitability. We asked when, not if, the consumer begins to exhibit demand elasticity, i.e. demand destruction, in the face of EV inflation. Now, before we get too much further on this, I just want to point something out. There's two opposing forces happening here. As companies manufacture EVs at larger and larger scales, they benefit enormously from economies of scale, and EVs are a very new technology, meaning a lot of the innovations and cost declines have yet to take place. So the overall long-term trend, EV costs will continue to decline, but there is a short to medium-term bump in terms of material costs, which will put pricing pressure on EVs. But remember, it's two opposing forces working at the same time. A lot of people seem to be overlooking the fact that costs overall will continue to decline with scale and new manufacturing techniques and technologies. Will Tesla get into mining? Depends who you ask. But we believe Tesla's volume aspirations and extremely high vertical integration. We'd watch Tesla's moves regarding securing supply of critical battery materials as an indicator for where the rest of the industry is going. Fair point. Expect more OEMs to go directly to the mining companies to secure more of their critical materials. With respect to Tesla's ambitions in mining versus other OEMs, one mining executive we spoke with last week said, quote, "Tesla is playing Quidditch. Everyone else is playing hockey." Now, I assume that what they're talking about here is Tesla's playing 4D chess, a whole other dimension that people aren't even aware of, but hey, maybe somebody gets this analogy better than I do. Let me know what you think they meant. As Tesla and other EV competitors re-architect the new renewable energy and onshore supply chain, investors must contemplate a wide range of adjacent factors such as real estate, automation, transportation, rail and trucking, and other considerations. Anyone watching remember the quotes I shared maybe a year or so ago from JB Straubel, Tesla co-founder, saying that he believes that legacy automotive manufacturers, quote, haven't done the math when it comes to supply chain and sourcing materials necessary for the batteries to put into the vehicles? Imagine that. JB was right. And now over to this tweet from Hindenburg Research. Shout out to Nathan and crew. Quote, "New from us. We are short Twitter. Musk holds all the cards. We see a significant risk that the Twitter deal gets repriced lower." We'll click through and read this in detail in just a moment, but Elon Musk has actually responded to this tweet from Elon Musk. Quote, "Interesting. Don't forget to look on the bright side of life sometimes." Now, is that a clue or a hint? I suspect it might be. I've noticed among many short sellers, and I'm not sure if this applies to Hindenburg, but among many short sellers, a recurring theme. They're perma-pessimists, always looking to find what's wrong. And sometimes this can work very well. But if you're wearing your short seller tinted glasses 24/7, it is possible occasionally you'll see what you think is a great opportunity that turns out to have been anything but. Funny feeling that Elon's "don't forget to look on the bright side of life sometimes" may be getting at that very fact. Of course, time will tell. And I've got to say, mad respect for the size of the balls on Hindenburg to actually be going short this deal when Elon's involved. However, it gets even juicier. Another tweet in the thread, quote, "You could create a better platform for less than $1 billion. I've said it before and I'll reiterate again. That being said, I kind of understand why you're buying Twitter, though I don't like that you're buying it with Tesla, an asset that you said years ago you'd only sell to fund Mars." Elon responded to this. "You might be right." I'm assuming that's in reference to, you could create a better platform for less than $1 billion. There's a decent chance this will have caused some panic among investors, especially around whether or not this Twitter deal closes. Now, let's see what Hindenburg have to say. Over here on the Hindenburg website, quote, "Musk holds all the cards. We see a significant risk that the Twitter deal gets repriced lower." We'll just read through a few key points here. Despite the intense public focus on the potential deal between Twitter and Elon Musk, the market seems to have missed a key developing risk. On April 14th, Musk disclosed a formal offer to take Twitter private. Twitter's board examined other options and reportedly considered soliciting other offers, but better competing bids failed to materialize, unsurprisingly. After expressing some very brief but strong hesitation, the board accepted the offer almost immediately, underscoring how Musk's offer was vastly superior to alternatives for Twitter, including remaining a publicly traded company. Since the day before Musk disclosed his initial stake in Twitter, multiple developments have weakened the company's position, threatening the current deal dynamic. As a result of these developments, we believe that if Elon Musk's bid for Twitter disappeared tomorrow, Twitter's equity would fall by 50% from current levels. Consequently, we see a significant risk that the deal gets repriced lower. Let me know in the comments below if you think this is a realistic possibility. The key developments that have occurred since Musk's initial stake include: 1. The Nasdaq has plummeted by around 17.6%, implying a Twitter price of $31.40 per share without a deal. Musk's disclosure of his initial Twitter position preceded a broad meltdown in tech stocks. We can see here Musk's disclosure of a position in Twitter versus the Nasdaq Composite, collapsing. Twitter has outperformed the Nasdaq by around 43% since Musk disclosed his initial position, setting the stock up for a material downside reversion should Musk walk away from the deal. On this point, I absolutely agree. If Elon bails and walks on this deal, rip Twitter stock. 2. Twitter reported weak quarterly results and disclosed it had overstated its users again, just 3 days after accepting Musk's offer, suggesting further downside that has not already been priced in should Musk walk away. Skipping ahead a little bit, Twitter acknowledged overcounting by about 1.9 million global users in Q4 2021, close to 1% of its total user base. This admission comes barely 4 months after Twitter's recent $809 million securities fraud settlement over past issues relating to overstatement of users. We suspect that Twitter continues to overstate its true daily active users despite the revision. As indicated by Musk, the platform is flooded with bots, spam and scam accounts that likely inflate its genuine user metrics even further. On this point, I also agree. 3. Musk indicated he will sell his 9.2% Twitter stake should a deal not consummate. And again, if Elon does this, obviously Twitter stock wreck. Is the $1 billion breakup fee really an option to walk away? Yes, we believe. Some market observers have debated whether Musk can simply walk away from the deal by paying the $1 billion breakup fee. The debate centers around a specific performance clause in the merger agreement, which gives Twitter the right to force Musk to close the deal as long as he has available financing. Hindenburg going on to say that historically, these are rarely enforced, and quote, in sum, we believe Musk could walk away from the deal for a $1 billion breakup fee. Given the above collective dynamic, Musk has incredible leverage to renegotiate should he choose to. And this is absolutely fair. If Elon really wants to swing around his weight here, he can certainly do so. Twitter doesn't really have any other options. They just have to bend over and take it. Whether Elon will choose to go down this path, time will tell. Let me know in the comments below, what do you think? Skipping ahead a little bit further, another key quote here. We are supportive of Musk's efforts to take the company private and believe he could get it done, but see no reason why he should at these levels. The overpriced Twitter deal is placing undue pressure on Tesla due to equity sales and the prospect of more margin debt. It's fair, it certainly presented a great buying opportunity for long-term Tesla stock investors, in my opinion. Musk has already sold around $8.4 billion in Tesla shares to help raise capital for his Twitter bid. These sales, which came mostly on Tuesday, April 26th, contributed to Tesla falling 12% during the day's trading session. As of this morning, Tesla is lower by 19% since the trading day before Musk's recent Tesla share sales. Placing both Twitter and ultimately Tesla's future on a foundation of further equity-backed margin loans or potentially more sales of Tesla equity amidst the volatile market adds risk to both enterprises. Fair. The risk-reward of shorting Twitter. Twitter is currently trading at about a 10% discount to its current proposed go-private price of $54.20. We view the risk of a higher competing offer as extremely low, as do I, and essentially capping the downside on a short at these levels. There seems to be no credible risk from an antitrust perspective, but the deal is still subject to risk of delay given the intensity of the political backdrop. Talk about an understatement. In our view, Musk holds all the cards here. I also agree. The board quickly agreed to the deal when conditions were vastly more favourable, and we think they'd make the right decision again when faced with the present reality. To date, we think Twitter has fallen short in managing the admittedly difficult balance between user safety and being an open, trusted forum for diverse ideas. Don't get me started on this. Overall, we are supportive of Musk's efforts to take Twitter private and see a significant chance the deal will close at a lower price. Best of luck to all. Disclosure, we are short shares of Twitter Inc. Best of luck to Hindenburg and their short position. I think they make a lot of valid points here. Twitter's back really is against the wall. Their position has only weakened, and I suspect that the board would once again be willing to accept a much lower offer if renegotiated. The question is Elon Musk really going to squeeze Twitter that hard, or will he complete the transaction at the previously stated $54.20? Let me know your thoughts in the comments below. And once again, credit to Hindenburg for having colossal balls. This is definitely a short I would not personally be taking on. But as I say, fortune favours the bold, at least sometimes. In either case, I desperately hope, and I know hope is not a strategy, but I desperately hope that this deal does close. Twitter is in serious need of some major help. Elon Musk is the man to fix this dumpster fire of a platform. And just when you thought it couldn't get any worse, it's official. I've been censored on social media. Twitter has shadow banned my account. My tweets are no longer able to reach any accounts except those already following me on Twitter. I wish I was joking, but I'm not, and it gets even worse. In a strange coincidence, almost the very instant I publicly and heavily criticized Twitter, both on Twitter and a YouTube video about, wait for it, their censorship, their fact-checking, their failures in said area, their shadow banning, their demoting and promoting, their political biases and so on, Miraculously, my account has been shadow banned, so that's right. My thoughts, opinions, and ideas are no longer able to reach anybody except those who are already interested in hearing them. If you guys remember that tweet I made, warning that the intensity, the ferocity of the reaction from social media, from big tech, from the US government, from Hollywood celebrities, and many in academia would show exactly why free speech is so important, why this Twitter deal matters so much, and just how deep the rabbit hole goes. I know many of you thought I was crazy at the time. Well, fast forward a couple of weeks and look at that. Twitter account currently with over 100,000 followers now dead in the water because why? I guess I said something that melted a few snowflakes, caused a few sphincters to contract. I can't for the life of me think of any valid reason why Twitter would suddenly stop promoting my content to anyone other than my existing followers. It's not like I'm out there saying particularly controversial things, just accurately describing reality. But it turns out that's all that needs to happen for your account to be put in Twitter prison. Here's a look at Social Blade, a website that I didn't really know about until recently that allows you to track activity on social media accounts, including followers and so on. We're looking at my Twitter page here. We can see in April I was gaining many hundreds, occasionally 1,000 plus followers per day. Then suddenly, out of absolutely nowhere, May 5th, for the first time I think in history, I have a day where my Twitter account doesn't gain followers. And to be fair, I haven't really tracked this data prior to Elon Musk's offer to buy Twitter. I was curious what would happen when he made the offer. Is the site gaining followers, losing followers, and so on? But I started paying attention, and this is just too hard to ignore. Average new followers per day was around 400 new users. Then suddenly, the moment, the instant I start publicly criticizing Twitter about censorship, shadow banning, and so on, my account stops growing. Now, some people might go, oh, it's a coincidence, Stephen. And if you're too dopey to understand the statistical significance, going from around 400 new users per day on average to an average of less than 1 in the following week, you're probably too daft to be watching this channel. When I saw this, I thought, hang on, this doesn't make sense. What's going on? Maybe Twitter stopped promoting my tweets somehow and that's why nobody's seeing them and therefore there's no gain in followers. Well, it turns out that's exactly what the happened. After sharing this information on Twitter, Tesla Facts replied they did a search for my account. Quote, your account appears to be under a search suggestion ban, i.e. you become essentially invisible to non-followers, which seems about right. That would explain why my tweets aren't reaching a new audience and why the daily increase in followers has gone from around 400 to less than 0. This is really fucked up. Now, I have no idea what's going on here. I don't know if this is a permanent ban. I've got no idea. Twitter hasn't contacted me, no communication whatsoever, and this is the whole fucking point. There's absolutely no transparency whatsoever. And this is something that Elon Musk strongly intends to bring back to Twitter. At this point in time, some useless wanker at Twitter probably saw me on YouTube insulting them, saying they were completely useless because their job is to censor, fact check, demote certain content. They got mad and thought, who is this motherfucker? Stephen Mark Ryan, fuck this guy. Next minute, account shadow banned. Now, of course, I could be wrong. Could be something else completely unrelated. But that's the whole point. There's no transparency. If an account has been shadow banned or whatever you want to call this, search block, whatever the fuck, it should at least say, Twitter has taken XYZ action against this account because of XYZ reason. At least explain what the fuck's going on behind the scenes. But there's none of that. There's no accountability. And when you have opinions, thoughts, and ideas that somebody at Twitter doesn't like and deems dangerous, harmful, or misinformation, this kind of stuff can go on. Now, don't get me wrong. Nothing is going to stop me sharing my thoughts and opinions and ideas. I have a pair of nuts. I'm always going to say what's on my mind. But not only is this a huge red flag, but somewhat of a wake-up call. I'm definitely going to have to start further diversifying the platforms on which I share content. Just imagine, for example, that my entire livelihood was based around my Twitter account. Thankfully, it's not. But just imagine if I didn't use YouTube, there was no Patreon, and that was the sole place that I communicated with people and shared my thoughts, opinions, and ideas, predominantly about Tesla and Tesla stock. I have absolutely no recourse whatsoever. Twitter just fucked me in the ass without consent. They're still fucking me in the ass without consent. And Twitter, just so you know, I don't like it and you don't have my consent. Let me know in the comments below if you guys and girls have any suggestions for new platforms I should start sharing content on. And while I'm at it, I really do implore you, if you want to stay in contact and stay in touch just in case something happens here on YouTube, the best way to do that at this point in time is to join Patreon. That being said, they've had their own issues as well, deplatforming people because they had thoughts and opinions that weren't acceptable. I don't really know a suitable alternative yet to Patreon. But if I keep sharing my thoughts, opinions, and ideas, instead of cowering like a little bitch because I'm fearful of what might happen, I'd rather be dead. So, as I was saying, if I continue, and I will, to share my thoughts, opinions, and ideas, it's likely that I'm going to continue to occasionally offend people who, rather than engaging in dialogue and discussing why they think I'm wrong and why they don't share my opinions, would rather just ban, censor, and or deplatform. I think it's in our best interest to have more than one means of staying in touch. You can follow me on Twitter at Stephen Mark Ryan. That's the only way you're going to see my tweets. And please don't forget, you can join Patreon with the card in the corner or the link at the pinned comment. You'll gain instant up-to-date access to my Tesla stock price targets out all the way till 2032, plus well over 100 exclusive Q&A videos, dozens of other exclusive pieces of content, and loads of perks. So I'll see you over there. And lastly, if I do ever disappear from Twitter and or YouTube, etc., and you're not really sure where to find me, just ask your mother, sister, or girlfriend. I'm sure one of them will be able to point you in the right direction. I'm Stephen Mark Ryan. This is Solving the Money Problem. Fuck you, Twitter, and I love you all. Yes, even the bottom-feeding woke morons who currently work at Twitter who think that they're doing a service to the world to censor and suppress people's thoughts, opinions, and ideas. There's still hope. Even you, one day, might actually provide some value to humanity. You can do it. And don't forget, war is peace, freedom is slavery, and ignorance is strength. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.